Welcome, ladies and gentlemen. This is Bert Dohmen with the Chart Guru. Let's take a look at the Shanghai Composite. China is in the news right now. Once again, we see the bulls on China telling us that it's the start of another bull market in China. The government is going to create a lot of new money, which will fuel the stock market and the economy, and China is in great shape. But let's take a look at the stock market because the chart seems to be saying something different. Here is the run-up from 2014. Right here, this was the summer, June. The credit crisis that was starting in China that we have been talking about started surfacing here. Overnight interest rates tripled from about 7.5% to about 25% overnight in just one night. And that showed us that the government was losing control over the financial market. And we said so at the time. And that's when they stepped on the accelerator, and we saw a big run-up in the stock market, up 156% in 1 year's time to the top. But as all artificial stimulation goes, eventually when it stops, and there's just too much debt having been created. And in China at the time, margin loans were about 5-to-1 leverage, which is huge. In the US, it's 2-to-1. And that was the end. They couldn't borrow anymore, and then the sellers took over. And you had this huge decline. The first decline here went exactly to the 50% Fibonacci retracement, which is right here. And that's when the government prohibited short selling, prohibited selling of stocks by financial institutions. Basically, it was very stupid, because if you can't sell a stock, why would you buy it in the first place? This circle here is where the government came out with all these rules. They arrested a bunch of brokers and managing directors of the largest brokerage firm, for example, right in here. So that kind of killed the market. So at this point, the only buyer that was still left was the government. And then you had another decline here. And now over the last month, you've had this rise from the bottom. It's what we call a dead cat bounce. And we could see it, I think, going up to this line here, but it's problematic. Actually, the resistance starts right here where the Shanghai index is at the present time. So that's all we want to say right now. Basically, just don't believe when they tell you everything's fine in China. China is now going into a deep recession in the private sector. The government will, of course, try to counter that with renewed stimulus and money creation, possibly. But it's not going to work. It hasn't worked in the US. It hasn't worked in Europe. They can print all the money they want, but if nobody is lending it out because loans are too risky to be made, then the money gets stuck in the banks and just sits there. And that's the problem in China right now. Companies are losing business. The imports and exports of China are plunging, which testifies to the weak economy. And the GDP number is totally fictitious coming out of China. So this is Bert Dohmen signing off for now. Join us again next time.